Good afternoon, friends. How you doing? I'm just setting up here. If you're online, just say hi. I'm here. If you have any questions, please put them in the comment box. Just going to rearrange some things here so I can see everything. Put everything in view. So I've got my iPad here. I'm going to make some use of that. And also I have my iPad here. Got my spreadsheet. We'll take a look at the spreadsheet. And so why don't we just take a look at this trade here. Now, I made a mistake when I put my trade on. But I wanted to simulate it in... So I simulate my trades in Thinkorswim. I put my trades on in Fidelity because I have a small account in Thinkorswim, but I have a big account in Fidelity. So I trade the SPX in Fidelity. But I use the Thinkorswim to do all my analysis and everything. All right. Let's make sure volume is on. Everything looks good. How you doing? So let's first take a look at the trade that I put on earlier. So the first trade that I put on. Now, first of all, let me just talk a little bit about before I even do that. Let's kind of set this all up. This whiteboard exercise is all about trading later in the day, or trading, a regular 0 DTE trade and bringing it into later in the day. How you manage your positions or your tranches, and how you manage profits. So, first thing I want to say is that you need to have a really good handle on what you plan on doing throughout a trade. I know that a lot of you just jump into a trade and then kind of wing it. And I can't tell you how much that is such a poor idea. Remember I said everything is about process. In order to have a process, you need to have all the things that are part of your process lined up, ready to go, prepped, all that. And all that is all part of your process too. So for instance, when you engage in a trade, you should already know what your risk limits are, what the size of your trading capital is, the available trading capital, what are the potential number of tranches that you can put on, and under what conditions you're going to put those tranches. So some of you might be asking, well, what is a tranche? A tranche is literally means in French a part of something. And in this case, it would be a part of your total maximum position size. Now, here's an important point. Is your goal to achieve maximum position size in all your trades? Absolutely not. As a matter of fact, I would prefer to tend towards a minimal position size in all my trades. All right? So that's the first thing. The next thing is that you should figure out what is your maximum position size. Really, really important, because that will determine the size of your tranches and your strategy around adding tranches. And your strategy might have different flavors to it, depending on market conditions or what's happening that day, etc. You might have an aggressive strategy. You might have a less aggressive strategy. You might have a timid, strategy. You might have unbelievably bullish all of these things. So you adjust your strategy based on what you think the market will bear and what will give you the best opportunity to profit. The general goal is to get the lowest cost basis that you can. In other words, you want to get your trade as cheap as possible. You want to get the best risk to reward as you can and still make it a reasonable expectation that you can profit. So those are the things that you drive towards. Now, as you can tell, that they're not specific goals. They are more things that you drive towards. Try to get the best risk to reward, the lowest cost basis, and still maintain a good expectancy of potential profit. Does that mean that you expect to get right inside to the center strike of your profit tent? No. We recognize that getting there is a lower probability, probably like 10 to 15%. And we're right at the edge of that right now because we haven't really had a good, solid pin trade in about 2.5, 3 weeks. So we're working right up on that. We're probably at if we got one right now, it would be like 1 out of the past 10 trades. So, that's the way it goes. Sometimes we get 2 or 3 of them in a week, sometimes you can go 2 or 3 weeks without getting one. That's the way it goes. But in any event, you're trying to position your trades so that you can get at least inside that first leading leg of your butterfly. And that's usually what I use for my probability of touch. I want to see that when I first put in that trade that, I have an opportunity to get in there, and maybe my probability of touch is better than 50, 60, 70%. If I can get it higher, that would be great. It was higher earlier today, and then it just, it obviously moved away. The other thing is that you want to make sure that your trading thesis, hasn't deteriorated. And I don't think that anything has really deteriorated yet. Not yet. And in fact, if you look at my original scenarios, I was expecting us to come down somewhere around this LVN, around 37, whatever it is, 37.55 or something, and then move back up. The other scenario I had was to just move up, right? So, I think I'm still within my expectations here. So nothing for me has really changed. All right, are there any questions on what I've said so far? Now, obviously, we were in much better shape about an hour ago. It was we were actually inside the profit tent, and it looked like we were going to head towards a pin trade and make crap loads of money. But as soon as I said that, for some reason, the market decided to drop. And it could have been the congressional hearings, could have been something that was said there. Who knows? It really doesn't matter. All that matters is that we're still in this game. We've pulled back. My initial position that I put on, now I'm going to get into talking about position sizing. So when I figure out position sizing, first of all, I look at what my total trading capital is. And depending on how big it is, you'll have certain maximum position sizes that you will choose for your trading capital. In my case, my maximum position size is about a little under 0.5%. That might seem small to some of you, right? But it does give me the opportunity to make as much as 5% of my trading capital with one winning trade or more, which is huge. If you can make 5% in one day, that's like outrageous, right? So for me, under 0.5% is about right. For a much smaller account, it could be as high as 10%, like, for a $2,000 account or something. Easily, it could easily be 10%. But as you get bigger and bigger, your maximum size should be smaller and smaller. But you got to figure out what that is for yourself. So given that gives me a certain size that I want for all my trades, the maximum size. So I figure that whatever that size is, let's just call it $1,000, right? I can break that up into maybe up to 5 positions. I will never do more than 5 positions. If I'm doing more than 5 positions, I really, it's like I don't have any plan. But typically, I'm usually taking about 3, maybe 4 positions. Like yesterday, I took 4 positions, and never really even reached my max size. Then I break up the individual positions or tranches into. So let's say I have these 5 positions. I have to break them up into something. So I might break them up this way. I might say there's 10 possible positions, and then, or whatever. And then I break them up into like a 2x, 1x, 1x, 2x, whatever. Generally, I do a 2x size position, a 1x size, which would be my 1, a 2, and a 1. So that would be 6. So that would be breaking them up $1,000 into 6 parts, right? So by breaking that up, that means that each one of my trades are generally worth around $1.50 to $1.80 or something like that. That's the way I break it down. I'm figuring every time I put on a trade, that's the average size trade that I put on. It's about between $1.50 and $1.80, or $150 to $200, $180. So it's all, pretty much guesswork here. So now I've broken my thing up into 6 things, and then I want to break those up into my 5 potential tranches. So the way I do it is I go a 2x, a 1x, a 2x, a 1x. So I will put on a 2x to start off. If it pulls back, then I'll add a 1x, then see what happens. Now I'm only committed now to half my total position size. If I feel like there's an opportunity to put more in, or if it looks like the market is finding a bottom and starting to turn, then I might add that extra 2x if I think that I can bring down my my cost basis of my trade. I'm only adding if I can bring down my cost basis. So I first got into the trade. My cost basis was around 1 to 7. I added to the trade. I was able to bring down my cost basis to about 1 to 10, and still I'm only halfway there. I like those odds. I'm not particularly confident that it's going to be a perfect trade today now, because it just, I don't know if the hearings are not going well or whatever. It just doesn't seem like I don't know. We moved down pretty quick for whatever reason, and it didn't look natural to me. It wasn't sort of a gradual move down or whatever, and we didn't recover very quickly. So, until something like that happens, I'm not really willing to put in another couple of trades. If it starts to move up and premium is decaying, and I can put in that extra 2 and still be within, a good shot of making a profit, I might add those other 2, and then finally that other 1. But if If I'm not getting that that vibe, if I'm not getting that, where the position is in the right place in terms of the market structure and the momentum, the amount of time left, all of these things come into play, then I won't. Yesterday, I added 4, and I was able to get my position sizing solidly down into a 10, 1 to 10 risk to reward, and it started to move up near the end of the day, and I was able to get out with a fairly okay profit. It wasn't great, but it was 70%. It's hard to argue with returning 70% on your money. I had the opportunity to obviously do a lot more, to make 900%. But it, just didn't come forward. I think I have the same opportunity here today. I just don't want to put too much more into it right now. I haven't seen any good reason to. Maybe later in the day when things start moving, or if we start moving closer to the strategy and premium is decaying further, and I can put on another tranche to reduce my cost basis further, then I'll do it. But I won't do it unless I can do that. Hopefully that makes sense to people. So one of the things that I do is I keep a spreadsheet on hand when I'm doing my stuff. Let me see if I can bring that up here. And it's just, it's basically like a scratch pad to me. You should be able to see this. I'll put all this in the middle of the sheet. So right here are my tranches.
Returning visitor.
Here is my my max profit. Here I've calculated. Well, that's the without any cost. Here's my my net max. Once I calculate in the cost, and I'm not looking at commissions or anything like that. A tranche is just a position, whether it's a butterfly or a spread or whatever. It's just whatever I put on. But it's one tranche, one part of my total position size. So these first two right here, they are one tranche. And so, maybe I can do that. And then this one was my second tranche. Maybe I can do a slightly different color like that. So I have 2 tranches on. I have this yellow one and then this, I don't know what color you call that. All right. I might have room to put, another couple, another 3 things, but I'll leave that right there. And then if I do that, then I'll add them up here too. And then I guess I could bring this all the way down here if I'm going to be. All right. So this just tells me my total max profit potential. This tells me my average cost, but it's not telling my real cost. My real cost would be equal to this times the number of things that I have here. Currently, that's 3. All right. And then so this would equal this divided by this. Whoop. That should be times 300, right? Because it's 100 shares. So here's, this is my cost or debit. Column, right? Maybe I can bring that down here. And this is my max profit. And this is my risk to reward. I like to make everything centered, so I'm going to make everything centered like that. So this is kind of like what I keep track of while I'm trading. It's really all I care about. Do I have a good risk to reward? Have I stayed under my total cost? My max cost here, let's say, is $1,000. Right? That would be my max. Am I under my max? I'm certainly under my max because I'm only at 415. I'm not at 1,000. Is my risk to reward good? And am I still in the game? And I think I am. I think we're still in the game here. You know, we can zoom in on this. You know, profitability is, you know, way up here somewhere. If I look at from an SPX point of view, the edge of profitability is this purple line. Let's see where that is currently. That purple line is right at 37.68. So right there is the profit line. I could easily come up here and get back into profit. There's my spread. So that's what I'm judging. I'm looking pretty good. I think that there's a good chance that I'm going to come back up here today. I keep track of where this line is, right? So I keep on adjusting that because it's going to be moving away from me. It's going to be moving up as time goes on, as the premium decays. That profit line is going to be moving towards the cyan lines, which is the at expiration profit. So that's what I'm tracking. Right? That's totally what I'm tracking. I've got this much invested. I can make as much as $4,000. I've got a good risk to reward. I've only got half my tranches deployed. I'm good. Any questions? No questions, really. No questions about this. So in terms of, total trading capital, this is probably a key number here. Well, it is a key number. You have to come to some realization that that's the number that you're keying everything off of. So important. That number is your max risk on any one trade. Who said I picked 468 as the profit? I don't. First of all, I don't see 468 anywhere there. A tranche is a part of my max position size. So when I go into a trade, I split up my max position size into several tranches. In my case, I split it up into about 6 different tranches. So today, the original trade cost $1.55. And I bought 2 of them at once with one tranche, the yellow tranche. Then I added another one at $1.05, which brought my average tranche down to here. So there's my average tranche size. Average tranche. Here's my my total real debit. Here's my total real debit. This is my theoretical maximum profit. Right? The way I figured my 1,000 here is, now this is kind of arbitrary, but it's, for me it works. I'm saying that, let's say that my my trading capital is 200,000. All right? For 200,000, I never want to have my max position size will never be more than 0.5%. All right? So it'll be 0.05. Oh, that's 0.5. That's my max position size. So this should equal this times this. So Donald says, so you buy when price is lower. Well, not just when price is lower, but when I feel like I'm still in the game for this trade, which I showed right here. I said, okay, I think I'm still within the game. It's starting to, to wane now. I'm starting to think, well, am I still in the game? I'm now hitting the LVN here. If I go back to this guy here, I'm just about close to that LVN. That's as low as I can possibly go. I want to see if it hits that. I want to see it bounce back up. If it doesn't bounce back up, I'm probably going to start looking at. I might. I don't think I would exit right now, but I'm not going to add here. I wouldn't add unless we came back up. And it looked like there was a solid bottom here, but I'm not so sure of that right now. We've just been moving steadily down, 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 fairly strong. I mean, that's strong. So unless there's some kind of reversal, I'm not doing anything. All right, Lance says, and effectively reduce cost basis, you have to reverse pyramid, correct? I have no idea what that means. Larger tranche to start, subsequent smaller tranches. Oh, I see what you're saying. No, those are just my, what I do. I go 2-1, 2-1. To me, that works. All right. I might, but that doesn't mean that that's what I have to do. I might go 2-1-1-1-1. Right? But that's the way I start, thinking I'm going to do 2-1, 2-1. Mike says, for a small account, what should you prioritize? One position with wider butterfly or more positions and narrower flies for the same total cost? For a small account size, I'm thinking I just want to make money, right? I just want to make money until I can potentially get to a bigger account so that I can put on at least 2 positions. So let's say that you only have 1 position, then I'm going to do really narrow flies close to the money and try to chip away at it. And every once in a while, I'm going to get a pin trade, and I'm going to advance my capital. So it's a completely different strategy when you have a really small position size. But when you start having, say, the ability to put on 2 tranches, now you can start thinking about, the size, what's a good size for your tranches. You have 2 tranches to work with, 1, 2. So your basic strategy is I'm only going to add to it once. So it better be something I'm pretty sure about. The other thing is that your total position size is going to be bigger, than what I'm doing here. If you have a small account size, like say $3,000, your max position size might be 5 to 8%. So you have to take that into consideration too. And on that 5 to 8%, you want to be able to make 25 to 50 to 100% fairly regularly. So you're going to make them narrow and closer to the money. When you start getting up to about $7,000 to $10,000, and you can put on 3 tranches, maybe you have to go a little higher. Maybe you have to go to 15. Your strategy is going to change a little bit, and also your total risk is going to drop. So that will kind of dictate what you consider your average position size too. All right, so hopefully that answers your question, Mike. It's a sliding scale. It is a sliding scale on position size on what your strategies are. When you have a very small account, you are, let me bring the big head back on here. When you have a very small account, you're trying to minimize your losses and basically kind of scalp and grab quick profits. Now, with the SPX, that means that you need to become pretty skilled at what you're doing, because the only way that you're going to be able to manage that, well, there are a couple of ways. One is you could have multiple accounts, so you don't get the pattern day trader rule. The other is that you can practice the reverse or zeroing out your trade with our pattern day trader killer strategy, where you put on the opposite trade and just let them both ride into expiration so you don't get a pattern day trader strike. But in any case, when but you're still going to have then more commission. You might be better off just with a small account to trade with futures and accept the fact that you're going to have high costs, and then figure out how you're going to do it from there. I did that all last year, and I brought an account from $3,000 to $9,000 in about 9 months. It just took a lot of discipline and diligence to do that. And in the beginning, my account equity volatility was very high. It was like this, Sometimes it'd be up and down, but it was slowly getting up, and then every once in a while I would make a big leap because I would pin a trade. And then once it got up to about 9,000, I made a monumental mistake by trading broken wing butterflies twice, and wiped out months of profits, and then overextended myself. So that's the way that goes. So you learn. You learn about what you're doing and what your position sizing is and what strategies you want to use and so forth. So since then, I figured I learned everything I needed to know about small trading accounts. I proved that you could take a small account and make it bigger. I showed what were the biggest risks, and now I've basically shifted my trading over to the SPX and a larger account, and running the service from there. So hopefully this is helpful. Again, when you have a small account, you can around 3,000 to 5,000, anywhere from a 5 to a 10% per max size of your trade as possible. It's actually, hard to not get a bigger size trade. You try to get the smaller trades though, if you can. If you can get down to, 2%, that's good too. But if you're trading futures, you have to also consider that you have to make at least 36 cents on your trade before you even get into profit because of the costs. When you graduate to, say, a $10,000 or a $15,000 or a $20,000 account, you can start adding, one, maybe two extra tranches, and so you can start practicing a little bit more sophisticated strategies in order to reduce your cost basis and so forth, and start playing with the risk to reward. All right, we got another question here. Did you avoid PDT in the smaller account by keeping it cash or using PDT killer technique? Neither. I simply traded futures, so I never had to worry about pattern day trader rule. And I never let anything go to expiration unless I was inside the profit tent. Right? That's how I did it. And I did it in front of everybody. I showed them day in, day out, and brought that account from $3,000 starting in April to $9,000 by mid-December. And it wasn't that hard. I mean, it just took discipline and patience. And then, like I said in the beginning, there's a lot of volatility in your up and down. But eventually you start hitting those pin trades and you jump to the next level. Then it gets a little easier. And then you jump, then you jump, then you jump. And then eventually you get some big jumps and you get up there. Then, of course, I made the monumental mistake of getting too big for my britches and trying things that were outside of what I should have been doing, and blew up the account. So that's what happens. So you learn. Now, the good part, though, for you is that I can pass on that experience to you so that you won't do it, or at least you'll know about it, and the potential is that you won't do it. And it also has modified the strategies that we're willing to take on so that you can't, or it makes it very difficult to get into that position. All right. So I'm looking at the trade now. It's looking pretty good, actually. So we looks like we bounced off of that LVN. And we might be heading back up into the profitable zone. I hope we are. So we'll see. I am, with the relatively high volatility and the hearings going on today, I'm still a little hesitant to put anything on. If it keeps on moving up, and let's say that this starts shrinking to here, and then we end up like right here, maybe right here, I might add to the position one more tranche to bring my cost basis down a little bit more, because it looks like we have the momentum to get in there. And that's exactly what I did yesterday. And we ended up getting inside the profit tent, or not the profit tent, but right inside the profitable area, and I took the trade off with a 70% return, with like about $800 being risked, but I was 70% profitable because that was my plan. I wanted to wait until it started moving up, and it had good momentum. I added one more to bring my cost basis down. It got in here. I took the trade. I did it all live too for you guys. You saw exactly when I did it. So here I am right now. My trade is, it's underwater. Here it is. by about $145. Let me just check to see if that's correct. Yes. So I'm underwater by about that. But that's not bad. You know, right now I have $145 of total risk for the potential of making over 4,000. I like those odds. I really like those odds. And if we can move up a little further, if we can get to break even, I'll feel good about that. But looks like we pulled back again a little bit. I'd like to see it start moving up within the next hour. If we can't get within, I don't know, 5 or 10 points of profitability, you know, then I'm going to start getting concerned that we won't. Right now, let's see, the edge of profitability is still at 37.68, which is amazing. So it's still sitting right here. We don't have far to go. We're currently at 37.50. We only have 13 points to get up here. You could get up there in like under a minute easily. Here's a 1 minute view. Okay. I'll ask one more time. Any questions on this? So we covered position sizing based on account size. We covered breaking your account down into multiple tranches and strategies for adding those tranches. Right? We covered the difference between trading with tranches or no tranches with small accounts versus larger accounts. You will have, depending on your account size, you will, and if you're growing, then you're going to have some sort of plan on when you're going to add additional tranches. And also when you're going to increase your total risk on every trade. Actually, you're trying to, that increasing of total risk is on a curve, right? It's not linear. You're trying to reduce the total amount of risk that you take proportionally to the size of your account as it gets larger. Still no other questions. Well, I'm glad there are no other questions. I guess I'm explaining everything perfectly well. All right, I'm done then, and I will post this on the website, or you can just go to YouTube and see it anytime you want. Take care. Peace.